Hello and welcome everyone to the week ahead commodity report, where we will be reviewing the markets for the week ahead. So first of all, as we go into a new week, what do you need to know? Well, gold prices last week, they did find some support, breaking out to 1 week highs on Thursday, set for a weekly gain of 0.5% as weaker than expected economic data out of China boosted that safe haven demand. In fact, that worked out very nicely indeed for our long positions, banking 270 points on gold. Not only that, meanwhile, platinum prices also rose 1.2% last week, notching up 3 days of gains. Now, next week, as we go into a fresh week, we do have some key data points to be aware of. One of those is manufacturing PMIs, and we also have the FOMC meeting minutes, which will be released on Wednesday, which can often, of course, be a catalyst for explosive moves in the markets, including the US dollar, gold and silver. Now, the minutes will demonstrate whether the Federal Reserve argued for stronger rate cuts or whether the consensus was to keep interest rates on hold. So as we go into a fresh week, let's move over to the charts and we'll talk you through exactly what we're looking at as we go into next week. First of all, moving over to gold, and I've gone back through last week's commodity report. I would definitely encourage you to have a look at that. 2 minutes into that session, we were sitting here at the Sunday open, essentially looking to see how the price action would move into this week. And what we had suggested to you was that we were very vulnerable to a further breakdown lower going into the beginning of next week. We were looking for a break back down towards 1,445 to 1,435 US dollars per ounce, but we weren't expecting the price action to get any lower than that, and we were effectively looking for a counterflow move at the beginning of the week for gold, and then support to come back in for a V-shaped reversal pattern back towards the 1475 to 1485 handle. That's in fact how gold has played out over the course of this week. So we broke down initially at the beginning of the week that usual counterflow move that we get. So essentially what you've seen here again in the previous week is this flush out to the downside. Not only has it triggered lots of long positions to get stopped out, who started to get long at the beginning of the week and had their stop loss just below the Monday low, so they get triggered into their stop losses essentially. That also triggers other technical strategies who would trade on a break of a daily low like that to then get triggered for a sell short, and then we of course see the squeeze to the upside. And this is really what we've capitalized on in order to gain our 270 points to the upside over a couple of positions this week, where we bought in at $1,449 and 1,456 US dollars per ounce. So that's worked out very nicely indeed. We've also tapped 1,475 US dollars per ounce. So let's move over to the weekly chart. This is where things do get very interesting indeed. If we move out to the weekly chart here, you can see in fact where the bull flag formation is essentially still here. All we've had is a rotation back towards the lower end of the flag again. That's been supported. We have a hammer on the weekly chart here, a reversal candle on the weekly chart, and essentially what I'm looking at now as we go into the next couple of weeks of November, which are from a cycle point of view normally bullish for gold. Mid-November is very common to be bearish and put in the low of the month, and then once we've got the low in, which we wanted to really determine where we would see that last week, and we seem to have that low in so far at $1,445 per ounce. What I'm looking at next week is whether we can push higher above this week's high next week. So essentially, if we can break above $1,475, and then we can start to make a rotation back towards the upper end of the channel by the end of the month. If we can break above the weekly highs here, this is where gold can start to pick up that momentum and make a rotation back towards the upper end of those channels. And then once we get there, gold is very much at a decision point. Going back to the daily chart again here, we do have some work to do still for gold to get back towards those upper end of the channels. Bear in mind usually again that normally the beginning of the week is counterflow for Monday and Tuesday. So we may get some consolidation and pressure to the downside. And then we have the minutes of the FOMC on Wednesday, which can of course be a catalyst for explosive moves. So we want to see whether we are going to be able to fulfill that V-shaped reversal pattern. Now going back to platinum. So on last week's report, this is where the price action was on platinum into the close. What we had suggested was we wanted to see whether we were going to get a further push back towards these layers of 860 to 880. If we saw buying evidence at that zone, we would look to execute a position, which is exactly what we did on Thursday. We executed 2 positions at $880, and on the breakout on Friday, over the 2 trades, we've been able to capitalize on 310 points profit on that breakout. So over a 1% move to the upside. Very straightforward trade opportunity to take advantage of there with Platinum. So I hope some of you did manage to capitalize on that move. Platinum was very oversold, over a 7% move to the downside in the previous week, which then leads me over to Palladium. Now, Palladium also gave us some very quick gains at the start of the week here. So we were able to capitalize on 2 trades, banking 400 points profit on this retracement. We did bank that trade, move our stop loss to entry price. We then exited the remainder at entry and then got back in Palladium once again. So we've now got another 3rd position on Palladium after banking 400 points, closing 2 trades, and then we're back in another position on Palladium, which then brings me over to silver. So silver, we've also bought back in here right at the lower end of these channels, and this is providing at the moment a springboard to potentially higher prices now as we continue to work our way throughout the month of November. The metals, as long as you're patient enough and you don't FOMO, I've mentioned this multiple times before, really try and avoid FOMOing in when the metals are breaking out and they're at the upper end of their ranges. You want to very much be patient. As long as you're patient, you always tend to get these opportunities to buy back in at much lower favorable prices, and we're quite quick to protect our trades, bank some profits, make sure we're locking in profits as we go along. So it's really important that you are also nimble in the market, that you're not using outdated technical strategies which just won't work in today's markets, because otherwise you end up always buying at the highs. By the time you're getting your technical confirmation, you're buying it too high, and by the time the markets are telling you confirmation to go for a sell short, the markets are about to get a bid. So you definitely want to make sure you're using more edge with your analysis. A research driven approach in the markets is very important. And finally, I'll just move over to crude oil as well, and you can see here very clearly the sort of ranges that we've been in here all week on oil. Essentially, we've been ricocheting between support and resistance. We've been coming in and out of oil quite a lot in the last week here, just grabbing between 90 to 100 points at a time here, and then coming out of the trades and then back into the positions here. You can see into the close, we've had another rebound back towards $58 per barrel here on oil. I do note that hedge funds and money managers, they have reduced their net long positions in the latest week with WTI crude oil. I'm effectively still looking to take the range here. So essentially, we keep selling every time we're at key levels of resistance and then taking profit back towards the lower end of these channels. And as we go into next week, that is not really going to be any different. We're also getting much closer to the OPEC meeting at the end of the month, and what we're tending to see on oil a lot at the moment is when there's optimism regarding progress between the US and China, oil will tend to rally, and when there's not, when the optimism fades, oil will sell off. So from that point of view, you can see where it's a really great market just to trade that range, just day to day. We're moving really nicely for a day trade market at the moment for crude oil. So I hope you've been able to capitalize on some of these breakouts in the latest week, particularly here on gold and platinum, which we identified clearly with you on last week's commodity report. Of course, I wish you all good trading, and if you would like to join a community of successful traders where you learn a research driven process to your trading, where you're not just using outdated technical analysis strategies or indicators, you're utilizing a lot more edge in the markets, where you're taking into account market sentiment, trade flow, retail positions versus those from hedge funds and money managers. You're also accounting for cycles in the market, seasonality, geopolitics, and of course utilizing our in-house intelligence in the markets. So with that, if you would like to become a member of the Gold and Silver Club, there is an opportunity for you to do so. If you would like to learn a research-driven approach to the markets, members get access to the following: exclusive live trading room webinars, real-time trade alerts, access to real-time trading research and market insights, access to our private members academy website, and also support and one-to-one mentoring. For more information about the service, please just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel, that way you're always kept updated with all of the latest commodity reports.